In today's update, we will be talking about everything around China and Russia. We will be talking about the US dollar and about the Powell and his rate hikes process and what we can be expecting if the markets want to go up even more. We're going to discuss that in this update, but before we continue, make sure to hit the like button and subscribe to this YouTube channel. As I'll be providing 3 times per week the content that you like and the content that you need if you want to be trading and investing in these environments. Also, I am back on Twitter, but unfortunately I've been hacked previously. If you have been clicking on a link that has been posted on the 27th of March, make sure that you are checking your wallet and moving the funds away from your wallet towards another one, to avoid getting drained if that is going to take place. Also, if we talk about everything that's happening in the crypto markets, I'll be releasing my crypto course relatively soon, which will be provided to you through my website. There's also going to be a new website going to be launched in the next few months. But I've got a whitelist, and if you are joining the whitelist for the course, you'll be able to potentially win one for free or get other features that you might be liking when it comes to content that I'm creating. In the link in the description beneath, you can find the information on the course, and you will be able to whitelist yourself if you want to. Also, before we start with the entire topics of today, there's a different format on my YouTube channel. There's a complete revamp going to take place on my other socials as well when it comes to Instagram. But for YouTube, today is Macroeconomic Day, in which we are discussing the macroeconomic events, and we're going to discuss some other topics that are important for you as an investor into the Bitcoin markets. And on Saturday, on 11 a.m. European time, we are going to provide you an update on the altcoin portfolio, which I have as well, the $1,000 altcoin portfolio, including an overview of the altcoin markets. And on Tuesday, we are doing an update on Bitcoin. Now, today in the update, we will be bringing you the information that has been brought to light in the past week, which is macroeconomic news. China has been partnering with Russia. We're going to discuss that a little bit. We're going to dive into Saudi Arabia, and we're going to dive into the news related to Powell and the rate hike process. We all know that 2022 has been a very heavy year when it comes to risk-on assets, and that had all to do with the fact that the Fed has been increasing the rate hikes in a manner that has not been seen before, and now people are shouting for a pivot, and the pivot might be bringing some bullish momentum to the markets. But is that actually the case? That's what we're going to look at in the update today. We finalize with the correlation between the dollar and Bitcoin and what we might be expecting from the markets if the Powell is going to pivot, or if the US dollar is not going to be the world reserve currency anymore. That's what we round off with. So let's get towards the first part of this video, in which I'll be diving into a few interesting news topics with you. Before we continue talking about everything related to China, firstly, it's very important to share this video with you, which is from our beloved President Trump, which is currently being shared on social media, but he has some things to say that are quite important for you to realize, and therefore I would like to bring this video to you.
Our currency is crashing and will soon no longer be the world standard, which will be our greatest defeat, frankly, in 200 years. There will be no defeat like that. That will take us away from being even a great power.
What he essentially says is that the currency, the US dollar, is not going to be the world reserve currency anymore, and it's currently crashing, which as a matter of fact is taking place. We all know that some banks have been falling apart. Inflation is going through the roof, and Powell has no real options of actually solving the case, which is through limiting the inflation, but also he continues to print as the Fed balance sheet has been increasing by 400 billion after the period where he wanted to reduce the Fed balance sheet. And there are also other factors taking into account that could be damaging the US dollar. The first one is our countries, which Russia and China, which are partnering up massively. There have been an amazing amount of news topics in the past 2 weeks about this topic, and showing that countries don't need the US dollar anymore, and we are into an environment right now where the US dollar is being used for settlements overall. However, countries can adapt towards a different system. They have a few options, of which the first one is that they partner up together and there's a competitor of the US dollar standing up, through which countries can decide which one they want to do, through which the US dollar gets away from the throne, and that is China. The second one is that we can adapt towards cryptocurrencies, as there is no real party behind a cryptocurrency and you can just use crypto for settlements. And that would be the best case, of course, but we're not there yet. So in this case, what we're looking for in news is that China steps up to become the new world reserve currency, and there's lots of topics about that. And the first one is that Russia and China are going to use the currency from China to, for instance, use that in emerging countries and in national currencies for settlements, which means that the US dollar is not going to be used for settlements, which means that the US dollar doesn't have that much demand, while the supply is going to increase even more. So what we have here in the news topic is that Vladimir Putin and Chinese President Xi Jinping are currently conducting in Russia, and Russia has vowed to move to use the Chinese currency as a settlement currency with countries in Asia, Africa and Latin. Putin expressed that using national currencies for international trading should be encouraged even further, which means that they will be using a different currency than the US dollar. Due to the sanctions that they have from the US, they have to adapt towards a different policy, and therefore they change it towards China, and they will be using that currency for international payments because they have been kicked out of the SWIFT payment producer or the payment software, right? As part of the visit that Chinese President Xi Jinping is conducting to Russia, Putin expressed his positive opinion on the use of the Chinese yuan as a form of payment in bilateral trade, especially with emerging economies. Now, this will be very important. There's another topic that I'll be bringing up later in this update, which is expressing exactly what's happening here, in which the importance of the Chinese currency to be accelerating even more. We'll get to why it's important in the update at a later point, but these are the fundamental macroeconomic events you have to watch, and those are more important than whether or not the CPI comes in higher or lower. Now, we also saw there's also a different case, which is that you need cryptocurrencies to actually use this as investment or as settlements, in which China and Russia have also stated that, or especially Russia, have stated that they want to adopt into Bitcoin as well. China is currently investigating a digital version of their own currency, as Russia invasion spotlights crypto's potential role. This is a topic from a year ago, but it's important to bring it up again, because cryptocurrencies can be the bridge in this case, especially digital versions of cryptocurrencies, and we all know that governments are stepping in to adopt a potential digital version of their own currency. And for Europe and for the US, it's important that they have to create a new currency, as their own value of their US dollar and euro is devaluing too heavy. So they need to create a new currency to get out of all the debt that they had prior to it. China and Russia are just using it for a potential case to take over the US dollar, which is a different game plan. But crypto can be a very big role in this, as there's no real ruler for using cryptocurrencies. Everyone can use it. And also, I've been into South Africa, where you can use crypto as a solution, as a peer-to-peer payment system for abroad payments, which means that if someone is working from Zimbabwe, they can transfer from South Africa to Zimbabwe with literally no transaction fees. While if they want to do it through Western Union, you are paying a ton. What they also want to do, China and Russia, is that they create a currency with each other, a new currency. We also know that from Europe. In Europe, we've created the euro. There is some pros, there are some cons. There are people favoring it, there are not people not favoring it. But we currently are living with the euro. And they want to create a currency themselves. And the important factor that you need to understand before we continue towards that topic is that they have a bunch of gold right now as a reserve that they probably keep on buying at this stage, which they can be using as a settlement, or they can use it to back it up, which means that their gold treasury has been increasing massively, and they are currently one of the largest countries having gold overall, and also some other commodities. Russia is one of the biggest suppliers when it comes to commodities. In that case, if they want to create a currency, they have to do it in a case where they back it up with something. We'll get to that in a little bit, but this list shows you the gold reserves in the country. Of course, the US is the largest, but the US also has the largest amount of cash in circulation, which means that you have to use it in percentages. What I want to show is that Russia and China are standing up here. They have a large portion of gold reserves. And why is this important? Well, if you look at the European countries, they have not been accumulating at all in the past 25 years. It's just flat. When it comes to Russia and China, they have been increasing their gold reserves massively over the past 15 years. For instance, Russia has been rallying from 500 tons towards 2200 tons. When it comes to China, we also can see that they're accumulating even more during this year, and they have been rallying from 500 to 2k as well. So they're building up their gold reserves, and there might be a reason behind it, which is the fact that they want to create a new currency, which is a currency that is backed up by or used by multiple countries. And it's all the big countries that we have outside of Europe. Brazil, Russia, India, China, and South Africa are developing a new currency, as they have been meeting together previously in March of this year. They are called the BRICS, and they have been having a summit in South Africa earlier when I was still around in South Africa, but they have been having this meeting, and they are shaking hands, which is great. But they are in talks of creating a new currency, and that currency will not be used to make payments, but that currency could be used for settlements, and that currency might also be backed by other commodities like rare earth elements or soil. According to the chairman, the transition to settlements in national currencies is the first step. The next one is to provide the circulation of digital or any form of a fundamental new currency in the nearest future. BRICS next summit is set to take place in August this year, so that's what we have to focus on. We're going to cover that, of course, but in August there's a new meeting, and probably they will be announcing it then. So they are going to investigate whether they are going to create a new currency to attack the dollar's dominance. In fact, even O'Neill has urged the bloc to expand. However, he opined that they should apply strict criteria to ensure the addition of new members continues to strengthen their collective goals. If the bloc expands to include other emerging nations with persistent surpluses, a globally fair multi-currency global system could emerge. So it is actually a great case if we are building such a basket. He urged the BRICS to focus on climate finance, improving healthcare, and boosting trade. So these things are all taking place behind the scenes. Then we also have the earlier topic, which is that China wants to become a bridge towards emerging countries alongside with Russia. So they want to be the world reserve that all those emerging countries need. So the emerging countries have an option to step out of the US dollar. In this case, we are seeing a factor of the first country stepping in. And we discuss another country in a little bit, but the first country stepping in is Malaysia. They say that there is no reason to continue to depend on the US dollar, and next to that, China is going to invest 39 billion in Malaysia, two topics that came out quite soon, and they are also considering creating an Asian monetary fund to reduce the dependence on the US dollars. So the macroeconomic playing field, we can see the news related item here as well, as you can see all the ads too. But the Prime Minister Anwar Ibrahim said today that there is no reason to continue to depend on the US dollar. Specifically, the country's Prime Minister stated that the continued dependence on the US currency in attracting investments into the country is unwarranted. There's another country that is currently stepping away from it, which is Saudi Arabia. I've got a summary here when it comes to Saudi Arabia, which is that they adopt an economic strategy without US dependence, following declining relations under Biden administration. Saudi Arabia, Russia, the Emirates, Iraq, Kuwait, Oman and Algeria to cut oil production. Then they are also partnering with China to build a Chinese oil refinery. And then also they are joining the trade alliance with China, Russia, India and Pakistan, and 4 Central Asian nations to step further away from reliance on the US dollar. Then finally, Saudi Arabia's crown prince is no longer interested in pleasing the US. So if we summarize all these news topics, we can conclude that countries are done with the US. The US dollar is losing its power, the supply is tremendously high, the demand is starting to drop massively, and countries are seeing a case where they don't need the US dollar and just use a different currency for themselves. So the US dollar is in trouble at this point, resulting into a case that the dollar is currently falling massively. Why is this important? We all know the Weimar period in which Germany had the same. They accelerated the balance sheet quite fast. Inflation started to shoot up, but there was no real demand for the currency. For the US, the demand is always there as it's being used for settlements by all those countries. But once the demand is going to be diminished because another currency can be used, the US dollar will just start to go into inflationary purposes as there will be so many dollars on the markets and the US dollar has to buy them up. So the impact will be substantially. It could be increasing inflation quite heavily, hence why having a basket of assets that are not related to the US dollar or are keeping your purchasing power alive is something that you should be doing. If China and Russia are buying gold, so should you. If Bitcoin is moving the same as gold at this point, so should you. So it's an important macroeconomic playing field, and we will be diving into this every Thursday. In the next topic, I'll be jumping on a different topic. Why it's important to have that one, which is Powell and the rate hikes. We have been covering everything outside of the US. Now we focus on everything inside the US. So when we talk about important events that we have to take into consideration when it comes to the US, we shouldn't be looking at the external effects, but we also should be looking at the internal effects. So here we are with the agenda for the coming period in which we have got the important events that we have to take into account when it comes to the decision making of Powell, when it comes to the hiking process, right? First of all, tomorrow we've got unemployment rate and NFP. It's a big one, and I'm already mentioning that I think that unemployment is going to be acting higher, which is a consensus we've seen over the entire week. We see the amount of jobs being created reducing quite fast, so the recession is around the corner, which means that the unemployment is probably going to be higher, and jobless claims today came out already, but the unemployment rate tomorrow is a big one. But then next week, April 12th, we've got CPI coming out. I might be going live, but CPI is going to be an important indicator. In Europe, the CPI has been dropping substantially during the entire period, so CPI is most likely going to drop and fall off a cliff, so then the yields can continue falling even more. Then when we fast forward next week, it's also central banks period, and then we've got the actual event taking place on May the 3rd, which is showing federal funds rate and FOMC press conference. And in between, we've also got GDP advance taking place in 27th of April. So there are many important events you should be taking into account, especially CPI next week will once again be important for internal effects on the markets. If CPI comes in lower than expected, probably we're going to pause the entire hiking process, or at least not continuing, as he briefly mentioned that he wants to continue the process and even wants to continue hiking even more. As last meeting in March, we had a hike rate again of 25 pips. This entire meeting also indicated that an increase are near an end. And I've mentioned before that as long as the rate hikes are going to be paused or slowing down and not pivot, it is an argument for the markets to continue rallying. So at this point, we are into a vacuum that is solving or helping the markets to continue moving up. People have been advocating for a pivot to take place, and I've been tweeting that as well when it came to the banks. But that has not much to do with the price stability of the assets at this point. It has more to do with the fundamental aspects of the entire hikes right now. Powell is destroying the US economy, and he's destroying it in a way we've not seen before. So there is a big recession going to take place. There is a depression going to take place, which is impacting the entire majority of the people, which are just middle class people working their entire life. Those are the ones who have to pay for their mistakes. Hence why he shouldn't be saving all the companies during COVID-19. We shouldn't be into lockdowns either. We shouldn't be having the high inflation afterwards, and we shouldn't be having these rates. So I'm advocating for a free market mostly, and not much governments stepping in to have a certain policy that is better for the market. So right now we get into a stage where they came from 75 bips to 50 bips to 25 bips. The conclusion was that we might be having 2 more hikes during this year, and it's going to be flat throughout the entire year. He's not expecting us to pivot anywhere in this year. However, a few things were important to discuss when it comes to this point. The committee will closely monitor incoming information and assess the implications for monetary policy. Of course, the committee anticipates that some additional policy firming may be appropriate in order to attain a stance of monetary policy that is sufficiently restrictive to return inflation to 2% over time. Reality, we don't come back to 2%. I just briefly touched on the fact that other countries are adapting towards China instead of the US, which means that there will not be much of a demand towards the US dollar at this point, which is probably going to push the inflation even more. There's a lot of supply, etc., etc. But what we also saw in this meeting is we see these hikes. We came from 0% towards 5% at this point. The process of getting inflation back down to 2% has a long way to go and is likely to be bumpy. Also, he is stating that rate cuts are not in our base case for the remainder of 2023. That is important to realize. As long as we are not pivoting, we are strong and the markets go up. If there is a pivot, it is because the unemployment is rallying more than expected. It is because deflation starts to kick in. But I think if we have some sort of deflation, it's probably not going to be impacting the rate hikes or the policy that much. If unemployment is going to increase, if a new banking crisis starts to take place, we're also probably going to get a pivot very fast. But then the markets are going to tank because we're going to get a credit crisis like in 2008. Right now we have seen the banks falling apart, or a few, through mispolicy, mismanagement of their own assets. And the hikes have been taking place at the end of 2022, right? In October, we were still at 3%. Now we are 6 to 9 months later. And I said previously in my updates, it takes approximately 12 months until you start to get the effects in real estate and debt market. Right now, you can see that real estate prices in the Netherlands have been falling off a cliff already. And it's going to accelerate even more the longer that it stays this high, the longer that he continues to do the hikes. In that way, the vacuum that we're living in can push prices even more. So as long as we stay in this vacuum and he's just going to raise by 25 pips or pause, that period we start to accelerate and continue running upwards. If the pivot starts to take place, that is the moment where we can start seeing the markets crash again. We'll get to that in a little bit. If we look at the historical price action when it comes to cutting federal funds rates. So what we have on the chart here is the orange line is the federal funds rate, which is used for the hikes that Powell induces, right? On the chart further, we've got the S&P 500 index. And I'm just going to put some vertical lines here. First of all, we've got 2000, in which we had a federal funds rate of between 2.8 to 6.5%. That is usually what we should be having. In 1980, we had a federal funds rate of 19%, and they kept on hiking the interest rate, so the entire inflation had to come down. We had inflation of 14% back then too. I wasn't living there, but hey. So what do we see in historical practices? And if we go back to 1980 and 1970, this is a different standard, but lots of people are comparing the current period towards this period, in which inflation remains to be high, the interest rate remains to be high, and everything is okay. But in this period, we did have the gold standard, and we didn't have the amount of debt as we have right now, which means it is very unlikely that we're going to get a copycat of this period, as the debt levels are so high and the macroeconomic standards are so much changing at this point that it's very unlikely to have this taking place. But what do we see? We do see that the moment that it starts to pivot, right, we start to continue falling. Another pivot taking place, and we start to fall with the markets as we drop from 100 points to 68 points for the S&P. Yes, 100 points to 68 points. That is the numbers of 1970. Over here we have the same, peaked out during 1980, and also inflation was quite high. But since we started to pivot, markets started to correct. Over here we have not been seeing the case, but we were already downtrending. So there are several arguments, and the most recent ones is the one in 2000, where we had the tech bubble taking place. We had a period of consolidation like we are seeing right now. And we had a period of May to 2000 until November of 2000, which is 6 months, that the federal funds rate remained sideways. Price remained sideways too. And then when the pivot started to take place, we cascaded from 1500 to 700 points. 2008, we had an increase, markets continued to rally, and then we had a period since 2006, June, until June 2007, 1 year, in which prices started to continue rallying. You can see that the vacuum is actually positive here. And then the pivot started to take place and we crashed. In 2019, we had the exact same taking place. We started to pivot. Markets didn't really respond in a bad way, as Corona just continued and the QE was still taking place at this point. 2019 is the outlier here, which means that we had a period of QE taking place since here, and that is continuing the markets to push even more. Right now we've had QT, so prices started to fall. We've got QE, so we're going back up again. But we can have a period of 6 to 12 months as long as the federal funds rate is going to remain sideways, and then we continue the rally until the pivot starts to take place. So this period, and the longer is better of course, but if it's going to be like 3 to 6 months, it's going to push price even more, and that could be pushing Bitcoin up as well. So a pivot isn't as bullish as you might be expecting it to be. If we look at the dollar course, dollar price level at this point, we've got a very complex chart, but I'll get through it. The yellow line is the 10-year yield, which is what the market is paying for government paper interest. The blue color is the dollar and the dollar currency index, which we often use in referring to price action of Bitcoin. On the chart itself, you see the Bitcoin price. It shows to you what the price action has been doing overall. We've got the entire Bitcoin chart here, and I'll just be using the dollar index first. Generally, if the DXY starts to run up, Bitcoin goes down and risk on goes down. Here we have seen the exact same. We started to rally and we have not been seeing a strong period overall. If DXY starts to show weakness, bull market here, sideways and down, peak bull at the bottom of DXY, right? The exact same has been taking place here. Started to break out in 2010, then the correlation already took place, peak high, but the actual bounce on the DXY resulted into Bitcoin topping out. Sideways action is usually great, but then there are other standards. Right now we've had a strong period on the DXY resulting into a weak period on Bitcoin. We start to fall down quite heavily and Bitcoin starts to rally up. If the inflation starts to come down, if unemployment starts to rally, if China and other countries are adopting towards China instead of the US, we're probably going to see the dollar currency index fall off a cliff and retest here, and in that period Bitcoin can continue shooting up. The longer the federal funds rate is going to remain sideways, the heavier the push for Bitcoin will be. Most likely we will getting towards 45k to 50k. People have also been questioning, hey, but when the recession kicks in, we probably are going to crash to new lows for Bitcoin. Could be, but right now we're into that vacuum. So we could be getting into a stage where we continue to rally when it comes to Bitcoin. We get to 50 to 55k and then have a year, 6 to 12 months of crash on the US stock markets. If the recession and the banking crisis starts to take place, that might be the moment that Bitcoin starts to become decoupled from the stock indices. Gold has been showing strength too, for instance. But if the theory that we shouldn't be buying Bitcoin right now based on the fact that macro is going to shift is not a strong statement, because we can have that vacuum of more than 6 to 9 months before the entire thing collapses, and then Bitcoin is at 55k, corrects to 25k or 30k, and then we continue the bull cycle. Because Bitcoin and crypto will be, just like other currencies, will be getting or pushing up even more if the US dollar is in trouble, because people will opt out from the system towards Bitcoin, from the US dollar towards the Chinese currencies, etc. So right now we're into a stage where the dollar is weak. You want to be long risk on assets as long as there is no pivot. And we can also see that macroeconomic wide, countries are adopting out of the US and are adopting towards their own currency, and that is going to suit crypto as well. So that is the part of Powell and the dollar. Let's round this one off. I hope you have been enjoying this update. Make sure to subscribe to my YouTube channel if you do. Also make sure to check out our trade letter. And if you want to know everything you need to know as a beginner or as a trader in the cryptocurrency markets, check out our whitelist for crypto course level 1. Also make sure to be here on Saturday morning at 11 a.m. in which we're going to discuss my altcoin portfolio, which is $1,000, and divide it into altcoins. We're going to look at the standings and my strategy, and we're going to discuss the altcoin overview for the markets itself. Be there and make sure to subscribe. I'll be there on Saturday. Have a great day. Ciao.